Tesla is facing one of its biggest financial hits in Canada, losing access to a massive $43 million in EV subsidies. This move by the Canadian government has shocked Tesla investors and raised major questions about the future of electric vehicle incentives. On top of that, the ongoing trade war between the U.S. and Canada is adding even more pressure. Could this mark the end of Tesla's golden era, or will Elon Musk find a way to turn the tide? Let's break it all down. Tesla has been struggling with declining sales in North America and Europe. Despite maintaining its reputation as an EV leader, the brand has faced stiff competition from rising players like BYD, along with increasing regulatory challenges. Tesla's stock has also taken a hit, with shares plummeting by 44% from their peak. The stock market reaction shows growing investor uncertainty about Tesla's future, especially as government policies shift against its favor. The biggest shock for Tesla came when Canada removed the company from its EV subsidy program, effectively freezing $43 million worth of potential incentives. This decision was based on claims that Tesla was using manipulative compliance models to qualify for the program. Mark Carney, Canada's Prime Minister, made it clear that his administration would not support Tesla's alleged strategy of artificially lowering vehicle prices just to meet subsidy thresholds. This move signals a broader push to ensure that EV incentives benefit a more diverse range of manufacturers, rather than a single dominant player. Tesla has long relied on incentive programs to maintain competitive pricing. The Canadian government argues that Tesla's approach to qualifying for subsidies involved deliberately tweaking specs and pricing to remain eligible. Critics, including the Canadian Automobile Dealers Association, have pointed out that Tesla has absorbed a disproportionate share of government EV funding, approximately CAD $713 million from Canada's IZEV budget. The recent decision to exclude Tesla from further rebates is an attempt to redirect incentives toward a broader range of EV manufacturers. Adding to Tesla's problems, U.S. President Donald Trump recently announced a 25% tariff on car imports, further escalating trade tensions with Canada. This move is expected to impact the North American auto industry, including Tesla, which has production facilities that depend on cross-border supply chains. Canada has responded by imposing retaliatory measures, with Mark Carney calling an emergency cabinet meeting to discuss protectionist strategies for Canada's domestic auto sector. The combination of Tesla's exclusion from Canadian subsidies and the U.S. Canada trade war has spooked investors. Tesla's stock dipped 5.6% following these announcements, overshadowing any brief market recoveries it had seen earlier. In Europe, Tesla has also faced declining sales, as local EV brands and new regulatory policies pose significant challenges. The global shift towards more protectionist policies is making it increasingly difficult for Tesla to maintain its market dominance. Tesla is unlikely to accept this decision without a fight. There are speculations that the company may take legal action against the Canadian government, arguing that its exclusion from the subsidy program is unfair. Another possible move for Tesla could involve restructuring its pricing strategy or shifting production lines to navigate around tariff and incentive restrictions. Additionally, Tesla may explore partnerships or collaborations with Canadian firms to regain eligibility for subsidies through localized production or joint ventures. The shift in Canada's EV incentive policies raises an important question. Could other countries follow suit? If major economies begin imposing stricter conditions on EV subsidies, Tesla's global expansion strategy could face significant roadblocks. One potential outcome is a rise in EV prices, as manufacturers struggle to absorb the financial impact of lost incentives. Consumer trust may also decline if governments continue to adjust policies unpredictably. Meanwhile, Chinese EV brands, which are already gaining traction in global markets, could seize this opportunity to expand further, especially if North American manufacturers become embroiled in policy and trade disputes. Tesla has built its empire by pushing boundaries and challenging the status quo. However, with increasing regulatory challenges, growing trade conflicts, and intensifying competition, the road ahead looks tough. The question remains, can Tesla overcome these obstacles and continue its dominance in the EV industry? Or are we witnessing the beginning of Tesla's decline as a global market leader? The coming months will be crucial in determining Tesla's future. What do you think? Should Tesla fight back against Canada's decision, or should it adapt its strategy? Let us know in the comments below.